Hey everyone, it's Nick with Us versus Herd. If it's your first time here, you like the content, hit subscribe. If you want to get notifications for when we post videos, tap the bell. And if you want to join our UVH fam, our community, links are below in the description to our Discord and our free options trading group. First, I want to say Happy New Year. Second of all, I want to start something new in 2020. What I want to do is start talking about stocks that I'm looking to purchase. Now, this is not an options trading video. This is about stocks that I'm looking to purchase. I want to look back 6 months from here or a year from now and see how well we did on these picks. These are the 5 stocks that I'm currently looking at purchasing in 2020. Of course, this is my opinion. This is not investment advice. I'm looking at this for my own personal portfolio and kind of my thoughts behind. And I just wanted to get this kind of short, simple, straight to the point of the 5 stocks that I'm looking at for 2020 for a long-term hold. This is nothing to do with short-term, nothing to do. This is about building your stock portfolio, building wealth long-term. So, first stock, as you can see, is Amazon. And Amazon, what I'm looking at here, 2019, was actually a consolidation year. It is up 20% over 20% on the year. However, I mean, the start of 2019 was a bit unreasonable because we had that sell-off end of year 2018. We had the huge sell-off 2018. But, overall, Amazon consolidated all pretty much all year long. I mean, it had a range between, let's say, 1,700 and 2,000. And if you look over the last couple of years, I mean, it's been running pretty hard from 747 up to 2,000. Tapped it again this year. Tapped it in 2018 and then 2019 it as well. So one of the things that I like in a stock is consolidation over the long-term period, and Amazon just did that. And if we look at their financials year over year, I mean, they're still growing at a very fast pace over since 2013. The purple is the revenue. They've been growing year over year, 2018 here, and then on a quarterly basis, revenue and profits are still very consistent for growth. So that's what I'm looking at. I'm not going to go through their whole balance sheet and their whole income statement in this video. If you're interested, look over it yourself. But Amazon, I think, in terms of disruption, has a bit of ways to go. They're starting to take away from FedEx and UPS, and I think that long term they have a lot left. People think that Amazon's already peaked, but Amazon, if you think about it, has just getting started in the grocery business, in the shipping business, and they are getting kicked off to do some big things. And I really like that 2019 was a consolidation year for Boeing. For Amazon, sorry. Next on my list is Boeing, though. Boeing. So Boeing, as you guys know, has run into some issues with the 737 MAX, and we're still not sure exactly what that means or how they're going to transition that right now. But what we do know, it has been grounded. Their quarterly financials have been doing decent, even though the plane has been grounded. So what I'm interested in is what's going to happen with the 400 737 MAXs that they have currently. How are they going to transition from that? So I'm not saying Boeing is a buy today. What I would like to see is a couple quarters and see how it goes. The other thing that I like about Boeing is, they pay a $2 dividend, so while you're waiting for the stock to happen, let's say you're a shareholder, you can be collecting that dividend money. And if you are part of like TD Ameritrade DRIP campaign, or when Robinhood rolls out the fractional shares, they're also going to have a DRIP campaign. So DRIP, not campaign, program. So a DRIP program, if you're not familiar with it, is a dividend reinvestment program, where basically when you get a dividend from a stock such as Boeing, it's reinvested. Instead of sitting in cash, it's reinvested into that stock as a fractional share. So that's one thing that, as you can see on my list as I go through it, there's going to be a few dividend stocks on here, and that's nice while you're waiting for things to happen with the stock that you want. But Boeing, in my opinion, is not going to go anywhere for a while. It has bottomed out here around 320. and it's had a multi-year solid year base around the 320 area. So I do like that. It has run in the last few years from 100 up to 446. And this is a consolidation period while the stock is trying to figure out what it's going to do. It's basically the same price it was at the start of 2018. Give or take, let's say $30. So if you held from 2018 till today, you're really only up like $20-$30 a share, which is not that great, but you were able to collect a pretty hefty dividend. They moved it from $1.71 up to $2.05 a share. So they've increased the dividend, rewarding the shareholders. So it's going to be interesting to see what happens long term. In the short term, we have to figure out what's going to happen with those 737 Maxes and how they're going to transition from that and how that's going to impact the bottom line. So obviously I would like the shares to go a little bit lower right now, 250, 275, then head back up to the 300, 400 range. And another dividend stock is AT&T. And AT&T hasn't really gone anywhere in 10 years. I mean, it's $39 now. 10 years ago, it was $28. It has pretty much been in this very tight range of 31 and 40, and they basically, they do pay out a dividend. They've recently increased it to 94 cents. Was as low as 74 cents, 60 cents. Now it's 94 cents per share. So the one thing that I want to say about AT&T, it's starting to break out of its channel. We're at the high end of the channel, and they're going to be rolling out 5G. And most people don't understand the technology behind 5G, but basically 5G is going to be disrupting everything. It's going to change everything for AT&T. So no longer will they be restricted to the cables underground and the fiber and all that they've built the underground infrastructure. 5G, it's going to be 100% wireless. You could probably see it in your city now in the Chicago area. You could see it on posts. You could see it. It's about 15 feet above the ground. You see these little boxes on there, and they're going to run. The future is going to run on 5G. Everything is going to be running on there. Their TV service, their internet, everything is all going to be on this 5G platform. It can handle an extraordinary amount of bandwidth. I have no idea what this means for the weather forecast and all the health issues that come along with it, but it's going to be rolled out, and it's going to change the entire business. It's going to change the world. So that's why AT&T is a fairly safe bet, and I feel like it's going to be breaking out 2020, 2021. Next on my list is Alibaba. Now, Alibaba has been impacted greatly by the trade war with China. In my opinion, this would definitely be, if there was no trade war right now, in my opinion, it would be over $300 a share, probably $400 a share. So they've been having some issues due to the trade war. We're back up at the high range right now. But what I like about them, looking over the last 4 years, they went from $60 a share up to $200, and really has been stuck in this range. It finally broke above it here, and mostly due to the trade war phase one deal softening or getting signed, and we'll see what happens. It hasn't happened as of today, but not saying it's not going to happen, but it hasn't happened yet. So, and there was a lot of scary things with Alibaba last year and the Chinese stocks of possibly getting delisted from American exchanges, those kind of things. And now that seems to have passed, the stock has started to rebound since the fear has given up. But if you look at their financials, year over year, I feel like the last couple of years, if you look at 2018, 2017, the revenue and the profit don't really reflect the stock price. And if you look here for 2019, they've been having really strong revenues, really strong profit. They've been hitting their targets. So I think it's only a matter of time this thing really breaks out. It's at the high end of the range right now, so we'll see what happens with the trade war. But I would feel comfortable, if they sign that phase one deal, I would feel comfortable in starting to accumulate a position on that. And then last but not least, let's not forget about Disney. So Disney, I like. I've been a shareholder for a while. Do have some shares that are in the 90s, and it's run up in here. And the thing is, Q1 in Q1 they're going to report Q4 for Disney Plus, and this is important because this will be the first quarter that they're going to be reporting numbers, competing with Netflix. They're going to start pulling licensing deals. So this, in my opinion, Disney's transforming from a entertainment company into more of a tech/entertainment company. I want to see what happens with their Q1 Disney Plus subscription numbers and watch time, and get an understanding of the business that they've entered in is the streaming business. But I feel like if we look at let's look at the 5-year here. Disney has been in a rut. It needed something to bring it out. I mean, the ESPN business was dragging down. They were having lower numbers on their theme parks. And if you look over the last 5 years, really stuck between 120 and we'll say 95-ish, 95-ish. So, with Disney Plus, this could be a game changer for the company in terms of profitability, in terms of what they can do with that content and how they can spin that off into the other parts of their business. So I'm definitely interested. They also pay 88 cents a share right now in dividends, and then you can reinvest that as well. So like I said, this is for the long term. I did pick up some shares in the 90s, been holding for a while, and we're up, over 40% on that, 50% right now. So, it has been chilling in here in this range of, 140 to 150 right now. And I think it's not really going to move until earnings come out, until people understand how Disney Plus is impacting the stock price. So that being said, those are the 5 stocks for 2020 that I'm looking at. Let me know what you guys think. Drop a comment below. Let me know what stocks you guys are looking at. Hit the like button. Definitely appreciate it. As always, stay safe, stay green. It's us versus herd.